Hello friends, good weekend. This is Vladimir and this is the weekly review for the 12th of May 2013. Well, last week was very interesting, mainly bullish in the indices, but very bearish on the majors. Very bearish on the majors. Learning from the past, it's signs of something serious to come. When the pairs are first to act, uh, it means that it's going to affect, maybe not immediately, but it's going to affect on the stock market. And believe it or not, but the rumors from the Federal Reserve are talking about the day after. And actually, many rumors and speculators and articles right now and special reports show how Bernanke prepares the ground to stop QE number 3. As not in between 2003 2006, when he just raised the interest rate by every 0.25 points. I'm not sure about the years. Maybe I'm wrong about the years, but if I remember correctly, it was between these years. Maybe I'm wrong again. But then he had a clear plan every month to do something. Now, the rumors say that Bernanke will not actually announce on a clear plan, but will see and will watch and will follow how all is going. Now, from my point of view, the rumors just there to make the market correct itself. That's how I see the things. The market might go and start to correct itself, and then Bernanke will, after I don't know 1, 2, 3 more months, I don't know how long, will come and say, "Don't worry, the Q is here, and we will keep that, blah blah blah," and will cause the market rise again. That's definitely a possibility. So the second scenario is that Bernanke actually will announce, based on rumors, we can't understand when exactly he planned to announce, on a stop of, or at least change on the quantitative easing purchasing. So just imagine how the markets could react. Right? For me, it feels like the markets are going up right now, just to prepare the ground for the down move, and the down move is definitely about to come. The question is how big. It could be big enough for Bernanke himself to come after, as I said, 1, 2, maybe 3 months, and say, "Don't worry, the QE will continue," or if he will actually announce about that, it could be good and strong enough for the Washington guys to come to him and say, "Bernanke, you have to stop that. The market is moving down too much." We cannot run away from that. As I say that, and I said it several times, take a look on every index. That's a weekly divergence. Weekly. Extreme. Okay? If we are now riding 15 candles, 5 more weeks only, it's like 1 month only, riding around the same tops, and we prepare 20 candles ride on weekly chart. After every 20 candles ride on weekly chart, we got serious moves of around 2000 points at least. Previous time in 2011 it was 2500 points. Let's say even we drop from here 2000 points, it's going back to 1300. 13,000, sorry, for the Dow, of course. Okay, every time you go back in history, you see that after 20 candles right, something big happened immediately, or just a bit like after that. Okay, so that's why I become with every week that it's going more and more concerned. As I said on the previous week, I admit my timing was wrong. I did not read the moves series. I correct. I was sure right from here we will see the drop down. We did not, but the current up move is very bad. Watching back on the Nasdaq here on 2012 on this up move, let me show it a daily chart. Okay, on this up move, I was sure it's going to start from here and then from here. I was wrong with my timing, But we all remember what happened right after that. All the move and even more was covered. Okay, so that's why I'm pretty convinced it's only question of time until the markets will make the stop and will drop it all the way back. In my point of view, 14,000 will be the first stop. Then I think it's most likely will go back to 13,000, or maybe even, and don't call me crazy, but maybe even all the way back to 12,000. Again, as I was talking about that, and as I said, the more this rise continues, the worse it actually is. From my point of view, personally, Bernanke already understands that, and that's why we start to get the rumors. And these rumors have two scenarios, as I explained earlier. One, Bernanke himself will cause the rumors, and after several weeks of drops, or maybe months of drop downs, he will come and relax again and cause the market to rise with saying, don't worry, the Q is still here. Scenario number two is that he will actually announce that, and after several weeks or a few months, the Washington guys will come to him begging for some more money. That's how I see this thing. I might be wrong, that's my opinion. On previous week, and for those of you who don't trade the indices, I beg your pardon, but it's important to me to talk about that. On previous week, I was talking about the DAX. If you remember, on the DAX, we have this amazing bearish butterfly. Right now, it is rebuilding itself. Now, pay attention what happened every time when we got 3 highs and 3 narrow ranges here on the harmonical indicator, 1, 2, 3, then down, and then recross again with pretty wide range, crossing again. Okay, I'll take you to the past to show you when it happened. It happened here. We got 1, 2, 3, all right, here, and then down, and recrossing, and that's what we got. Right? Right before that, that's what we have had. We had this ride. Okay, sorry, it was here. Okay, we got 1, 2, 3. Right? That actually here it did not make the force move like down and up again. It just crossed down, and we got this very big correction. But right after that, we got it. 1, 2, 3, down, cross again. Okay, here we're trying to cross the ground, and we all remember what happened then. Now, I don't claim that's exactly what's going to happen, but it's definitely prepare us to the stop. And as I said, Dow starting from 8300s up to 8500, it's time to watch for a potential sell. Now take a look on the daily chart. Daily chart is reaching extreme. You see that? Daily chart created an inverted hammer on the previous candle. Well, that's definitely not the most classical inverted hammer, but we might see drop down back to 8150 or the 20 MA on the daily chart, and then a continuation, or we might see first of all a bit of continuation closer to 8500, and then much stronger drop down coming together with the daily RSI extreme of course is 80. All right, so in my point of view, we are stepping forward very fast to the what I will call the black day of the indices. I guess I will not be done what to call it that, right? Again, right now it still could play a bit higher, still try. You can see every indicator is trying to do that, but the retraces on the current market are much stronger. Each of the retraces comes and more and gain more and more bears. Okay, so in my point of view, as I say that not once, several weeks, after a few months, and we get something pretty big here, pretty big. I will bet in between 10 to 25% drop down, maybe even more. I am doubtful it's going to happen immediately. And now back to forex. Euro dollar, pound dollar, Australian dollar, New Zealand dollar, and all other pairs. We have many to talk about. Let's start with the euro dollar and the pound dollar, as they're the main two. Head and shoulders on a daily chart. Does it look like shoulder, head, and potential shoulder again? We're about to see a drop down. We can see 130 is being crossed, but the 200 moving average still holding. There is one thing to pay attention to, and that's that RSI crossed the 50 down and MACD histogram just crossed the zero line to the negative again, as you can see. I was talking about that on my previous reviews. The euro is going down. It's only a question of time, and we have to sell every rally of the euro. I was talking about that, and I keep my opinion about that. The euro is in a bad condition. Countries like Slovenia, like Luxembourg, and some others are under really bad conditions. No one is talking about it yet. But yet, that's the main word. Everyone is concentrated on Germany, France, Italy, Greece, Cyprus, Portugal, Spain, which have been forgotten for the last 2 months. Alright, the euro is in bad condition. Draghi cut the rate. Okay? He said he might cut again. He said he keeps open mind on negative rate on the deposits. Just think what all that means. From my point of view, euro is going down. A break and a clear hold below this support. That's a bit lower than actually the 130, and we get the okay to go. Targets 127, 125, 120 again. I would not be surprised if all that will be duplicated again. Okay, it might take time. I think we are moving down. The only way I will think the euro is up again if Draghi will start to try to push it higher. Strong euro cannot lead to eurozone recovery. Okay? Draghi seems starting to understand that and starting to act on this direction. They try to devalue the euro. Draghi is not alone. In Australia and New Zealand, we got intervention as well. In Australia, their Fed cut the rate as well. In New Zealand, the central bank intervened and sold New Zealandian dollars just to devalue their own currency. This was the only second time the New Zealandian bank did it for the last 30 years. Only second time. Remember I was talking about a world war of currencies? Do you remember my words like several weeks ago? It's there. Japan is the leader of this war. Right now, because of its direction actually, and that's what they do, Japan leads everyone else to go and do the same, intervene into the market if they want it or if they don't want it. Euro did it already. South Korea did it. Australia did it. New Zealand did not cut the rate, but they intervened and sold their own currency. Everyone will not have the other way to do that. They cannot stay behind. So every rally should be sold on the euro dollar, break below the support and hold below, opens the doors for us to go for 127, 125, 120 as the final target. Pound dollar. I was talking about this pair many times. I think down, but we have to break below this line. Right now, we're still inside the channel. Right now, it still could make a stop inside and create a bullish hidden divergence on the next 1-2 days and push it up. Break below that, retest and hold below this channel. Break below, retest and hold below the channel, and we get the okay to go. 148 is the target, the final target. Right? And between 151 will be the target as well. On a weekly chart, there is a bearish hidden divergence already. it means that the pound most likely will gain its bearish move. I was talking long time about the pound dollar. I told you get ready to sell around 155, 156, maybe 157. You remember my words. We got to stop here. We got to drop down. Right now, the break of this channel and we get the okay to go. I think down. No way for an up. And even if the pound for some reason retraces up, again for some reason, and creates here a new high, we will be still under heavy divergence, and this high that will be created, if it will be created, will be very strong sell. The next pair, Australian dollar. Australian dollar, friends, did something that we were waiting so long. Broke this channel down. I will sell it. I will say it very, very, very clear. Sell every rally. Australian dollar is aiming the 0.98, 0.99 range. This range. Australian dollar is going down. Every pullback, sell it. The only way to get out from the Australian dollar is if for any unexpected case Australian dollar will close above the 101.80 again on the daily chart. Only then we'll have to reconsider the short. Every pullback is a sell. Go down for the 4-hour chart. You can see here we get a convergence after the break. Every pullback back to 10040, maybe higher, closer to 101. Every pullback is a sell opportunity. On the 1-hour chart, we got more than 20 candles right, so we might go for the upper band. Then with the bearish hidden divergence, we might go for a sell. Every pullback, look for intraday sell opportunities. 4-hour, 1-hour chart, look for sell, not to buy. The only way to look for a buy is, as I said, if it goes and close again above the 101, 65, 80 range. Weekly chart is breaking through the Bollinger Bands, providing a down move. From my point of view, Australian dollar will go all the way to 0.98, 0.99 range, create some bottom there and will cause a pullback for a few weeks, and then down again. If I have to bet, if I have to predict, I would not be surprised if Australian dollar will go to 0.96 again, and maybe even will successfully break it this time and take us all the way to 0.85 again. 0.85 or 0.86, it's the same. I know it sounds crazy. I know something bad has to happen in the world. Watching on all the charts make me wonder how strong the Australian rate is. If they cut the rate by 25%, by 0.25%, maybe the value will be decreased by 0.25%. And that's why I'm very, very, very bearish on my views for Australian dollar. Of course, there is another very interesting pair, and that's the Aussie Canadian, which I will talk about a bit later. New Zealandian dollar, well, you know my opinion. You know how many times I said sell, 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 sell. And I still scream sell, 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 sell. Okay, it has to place itself now below the 200 moving average in order to continue. But let's make it simple. Every pullback it makes, sell. Every pullback it makes, sell. The only way to reconsider, get out from the sell is if it managed to break this trend line and the resistance around 0.8460, 0.85. This is the only way to get out from a sell. Targets, we have a monster support here, 0.8150. We have 0.8080. I think we are going all the way down to 0.78 for long run. In other words, sell every rally. As I showed on the Australian, same here. Every rally, sell it. Every rally should be sold. How that should affect on the cross, we've been talking about sometimes. Well, you know my opinion about the Australian Kiwi. I think it will push it up back to the opposite Bollinger Band, at least, probably even a bit higher, around 123, 123.70 range. There I think it will stop and will drop down again, but it's still far. This divergence is daily with weekly combination. As I said, I think it's creating a bottom on this range. We'll try to push up again. If you remember, several weeks ago I was talking, well actually a long time, I am talking about pound Kiwi to buy. I will make it simple. Every pullback down, buy. We have beautiful monthly divergence. Buy that only if you have swap-free account. I updated you about that also on the blog this week, the last week. Pound New Zealandian for long run will go back to 196, 206, and then I think it's able and it should go all the way to 240 as a final target. 240. Just imagine how many pips you can collect there. Swap free account, you should hold your buys. If you have few, trail the stop losses to guarantee profits. The next opportunities I have on my list, Australian Canadian. Let me show this one. Aussie Canadian. Broke, let me erase the lines so we can see that clear. Broke the Bollinger Bands, making band to band on a narrow range. Broke the RSI 50 down, MACD down. Perfect. There is a monster support here around 0.99 plus. That's probably where we are aiming. Looking on a daily chart, we're still going down, but we are creating extreme. I don't think we will pull back up from here because the weekly chart is still very bearish. But I do think we will get a pullback. The pullback will take us back to this range. Okay? It could take us a bit higher. And in other words, sell every rally for the Australian Canadian. For a buy, that's exactly the range. We are there right now. That's exactly the range where you should look for to collect this pair. Enjoy from some correction up, 100, 150, 200, maybe 300 points up, and then sell with full power. Final target for this pair, in my point of view, is the duplication of this channel, which I think will be broken. In other words, final 0.93 for long run. Sell every rally. First of all, look to enjoy for a rally here. Combination of daily chart with 4-hour chart divergence. You can put this trend line here and look for a break above it. That will bring us for an up move. Okay, a break here, a push back up, and then sell. Aussie, CAD, sell. If you remember my words several weeks ago, I said New Zealandian Canadian sell. Remember? Here, we were talking about it here. I told you, sell it. We are there right now. In my opinion, it's just the beginning. Good target to collect money is the 200 moving average, of course. And then this monster support area around 081, 70, 082 range. That's a good place to take your targets, your profits. First profits. Right? I got 2 emails, I must admit, not many, but 2 emails saying me, Vlad, you are crazy. Why should I sell New Zealandian Canadian if the trend is so strong? Well, today you see that. Okay? Weekly divergence is not question of if. Weekly divergence is question of when. When the move will come. Here you go. Several weeks after we talked about that, after we said sell that, you got a drop down. It's like 350 points right now. Not too many, but still pretty nice, isn't that? The next thing I want to discuss is the yen pairs. Yen pairs are celebrating a beautiful rise. I was talking about it on the previous week. I said we might push a bit more. We are pushing a bit more right now, but I will show you something interesting. We have 1, 2, 3, 4. The fourth high is being created right now. It's still early, but I want to see when it makes the tick down. When it does, that's time to sell the dollar yen. Then it will affect all the other yens. As I said, there is no question if, there is only question when. We have hidden divergences on monthly. We have continuing divergences on weekly. That's all. Euro yen looks like aiming to 135, 138 range. We might go there before the big correction comes. Anyway, from my point of view, there is no need to sell right now. There is no need to increase the sales right now. Just let it work. Patience. We will get the weekly chart. We will get the weekly confirmation. Then we will understand it's time to sell. Right now, weekly chart still does not provide any sell. Some more interesting opportunities. Canadian against the franc. Just broke this channel and is moving up. I think it's able to go all the way to this area on 96.30. In other words, I would say it this way. Every pullback down is a buy opportunity. Mainly because we have a bullish convergence here. Bullish convergence here. Every pullback down should be a buy opportunity. Final target around 0.9650. 0.9620 could be also a good level. That's about the CAD franc. Pound franc, another very interesting condition here. It's creating a continuing divergence. It is fighting the 200 moving average and the resistances. Wherever we get a clear bearish candle pattern with the divergence completed, it's time to go for a sell. Sell back to daily 20 MA first of all. That's my opportunities. We have a lot this week. Most of them for long run, some of them for short run. Of course there is one more I forgot. Euro Aussie, continuing divergence. It's forming right now. Watch this trend line. That's what I have to say. Watch this trend line. I think it's going to make a stop here and push it down back to 20 MA, maybe even lower. Not because of the Australian. I think because of the euro. Euro will drop down. That's my opinion against all of them. Against all of them. That's what I think about it. Friends, as I said, we have a lot of charts, a lot of opportunities. So, if I confused you, please rewatch the video. Okay, write down everything. If you have any question, leave a comment on the blog, on the Facebook, email me, whatever you prefer. You know I don't ignore, I reply everyone. Your comments are very, very welcome, and I will appreciate if you leave a comment, of course, on the blog, so other people could also enjoy our review. Thank you for your time watching this video. I wish you a wonderful week and good trading this week to come. Yours, Vladimir Ribakov.